It's Monday, 21st of September. We take a look at what was happening last week on the Nairobi Securities Exchange, as well as what to expect for the upcoming week. With us in studio is Mr. Willis Nalwenge. He is the head of research at Kingdom Securities. Welcome to the show, Willis.
Thank you very much.
What was happening last week on the Nairobi Securities Exchange?
It was an interesting week. It started slow, very low turnover on Monday, and then on Thursday it spiked, which was an outlier in the market, and also focusing on Safaricom, basically. And then on Friday it normalized to what we expect. For Safaricom, what we see is that the price hasn't moved very much, considering it was one big player coming into the market, one big foreigner. So that may manage to stabilize the market, which was a good thing for the market, considering that in such a case, we'll have seen a downward move in terms of them trying to mop up everything in the market.
Okay.
On the other end, we saw that there was a positive thing for the local investors, considering that we saw most of them trying to harvest the profit that had been gained in the last 3 months when Safaricom had dipped to about 26 shillings.
Okay.
So it was a positive thing for the local investors.
All right, because I think on Thursday 115 million shares traded, and that was a huge sum. What was happening there?
It was basically one foreign investor coming into the market, which
Okay.
which again shows a little bit of confidence in this, into the country.
Yes.
Remember that it's when you are trying to open up the economy, so any positive information that you're getting, especially in terms of the stock market, so it's a positive things for the local markets.
So is it that the foreigners are seeing something in Safaricom that we are not seeing? Because we've also seen the local headlines say that the ownership of Safaricom by the domestic investors has actually come down to 4% of the total company.
It's not a bad thing when we see foreigners coming in. Remember that even the trade that we're getting, especially if it's dollar oriented, it's a good thing for the Kenyan market.
Okay.
But if you're looking at the ownership of Safaricom, I believe that should be the retail and the local investors.
Yes.
But again, if you're covered by the government with 40 billion of the
Yes.
total, so we're still on the positive on that front.
Okay, I still think we should buy, because we're the people who are actually paying Safaricom and helping Safaricom make their money. I mean, all their money is made from Kenya. So to see the shift in terms of ownership down to 4%, I guess maybe there's someone out there who sees some positivity that perhaps we need to pay attention to.
Fortunately, our market tends to be an upward oriented market.
Yes.
When markets are going up, everybody is excited, everybody
Yes.
wants to buy,
And the market.
and most of the time market timing gets us off the foot. So
Okay.
every time when a local retailer comes in and they see the price going up, they tend to enter at the wrong time of the market.
Yes.
Most of them don't look at it when it's going down. So
Yes.
the moment they get the hit in terms of losses, most of them do not want to get the negative hit. So
Okay.
we tend to shy away when the markets are down.
All
but
right.
when this everybody sees it
It's
going
going
up,
back up, then we all
everybody
want to pile
floods
in. Okay.
And unfortunately, that is why we lose all the essence of the market.
Exactly. All right. So some interesting trades last week outside of Safaricom. We also saw a huge trade go through Fahari iRate on Monday. Do you have a sense of what was going on there? Has anything changed in the rate to date? I know the ownership did change from Stanlib to ICEA. Is there anything happening in this particular counter?
Nothing much has happened on that particular counter. I believe again it's one of the foreigners trying to offset getting out of the trade, which again, unfortunately, when we're trying to drive rate and D rates into the market, it's unfortunate when you see one big block exiting, and especially when the price are suppressed like that.
Okay.
The positive thing about the Fahari rate is that we're still seeing properties being coming out in good setting. I know they had a problem with one of the major malls with the anchor client, but I believe they should be able to replace the anchor client as soon as possible.
All right.
That should not be a problem for them.
Okay.
And again, we see that with the assets that they have in terms of properties, they're well located, they will continue generating income. The only problem is the thing that happening right now, and if you look at all properties owners, especially the insurance companies and also some of the banks which own properties, will tell you that they've all had a hit So it's something that is a wave in the market. It's not something that we can be able to protect ourselves in.
Okay.
So the only thing that we can sustain ourselves is let's wait for the ride. Ferrari rate is going to turn around.
Yes.
And it will be a positive thing for them.
Is it something worth buying or considering at 5.4 shillings per share?
Anybody looking at it in the long term, it is a positive trade. What we will see is that as time goes by, people will come to understand that owning the rate is a good aspect. Apart from it helps diversify their property holding.
Okay.
Most of us are tending to go into the plots, into land, real estate. But if anybody can be able to go into Ferrari, then they can be able to realize a little bit of liquidity on that front. So
Okay.
Ferrari rate remains one of a good aspect of getting into the property market.
Okay.
So-
Do you see it moving from a point of 5.4 to say 8, maybe in another 2-3 years?
Yes, I do.
Okay.
Remember that they're still continuing to acquire property, and I believe that the property that they're acquiring will be able to generate positive returns for them. So the only difference is the rate of return for that property will be able to generate. In Kenya, the average rate of return for property is about 8.5 to 8.7. So if they beat that, then that's a positive thing for the holders of the rate.
Okay, fantastic. Then we saw a bit of movement upwards and downwards for some of the stocks that had rallied in the previous week. Nation Media was one of the companies that stood up. It had gone up to about 19.5 shillings. Then last week we saw a bit of price taking, but towards the tail end it came back to 16.5 shillings per share. Is there anything happening there, or what are what are you telling investors to do in that one?
NMG is shifting to digital, and they're doing a good job on that front. They're really running their shift from print to digital, which is a positive thing, especially in this market, whether we are looking at the current pandemic environment or after pandemic environment. Remember that even international newspapers are trying to move on that front. The only thing about what we saw in the market, especially the rally of approximately, it really rallied from 9 shillings to 19 shillings. What we know is that NMG issued a bonus, share bonus, and they already closed that. So the anticipation of the market on the listing of the bonus is a positive thing to drive the stock market, the stock up. So the people who want to exit, or the people who will want to exit at a particular time, they will now rush into the market, will want to exit and at least capture a little bit of the profit before the market goes down. And unfortunately, if that happens, the price will suppress itself faster than we expect.
Okay.
So for the time being, I'm telling those cautious retailers, it's time maybe to take the profit as it is and wait for it to rally a little bit down, and,
Yes.
before they come back.
Okay.
Come back in.
So take your profits at this point and then wait and see what happens, and then you can start picking it up again.
That's definitely what I'm saying.
Okay. What other stocks stood out in your radar for the last week?
We've seen a little bit of the banking stock. Remember that we are closing Q3 at the end of this month, so that's something else that we're looking at. Unfortunately, the major, what we call the large cap, the stand charts of the market have really, the price have really suppressed. But again, with the stock maintaining profit dividend payment, it's still a good stock to invest in.
Okay.
For long term, again, we're looking at stocks like Kengen. Kengen, remember that as of the moment, there's been a lockdown and the companies are not performing well.
Okay.
On the return and the reopening of the company, we expect that there will be an increase in terms of uptake of power, and then, but these I'm talking about long term. For those who are expecting
What's a good entry point in terms of price and maybe a good exit point in the long term?
Anybody who's getting in anything below 5.5 is a good thing for Kengen.
Okay.
Because long term, five years, if they manage to work with their major client, that is KPLC, in
Yes.
terms of trying to streamline especially the revenue generation. And then KPLC still needs to look at the way they manage their corporate governance. It's a very key issue that we've seen the last 2-3 years. Has been a very big effect on that.
Okay.
And then there's also the issue of trying to rationalize on their debt. So those are the things that KPLC need to look at. Now, if KPLC manage to look on that front, then that will definitely trickle down to Kengen, which will be a positive for Kengen.
All right. It's interesting when you talk about KPLC and Kengen, because it sounds like there's one company that is efficiently run, then there's another company that there are many question marks there. So how does it work? Because KPLC reported its numbers. 262 million was the last number that it reported in terms of profits. This was less than 10% of the profits they had they reported in the previous year. And we've seen them talking about getting new debt, getting into new lines of debt. We've also seen last week the government get into partnership with Japan just to be able to extend funding into the energy sector. Do you see a point of recovery, or does KPLC remain as is, and does KenGen remain as is?
The good thing about the two companies, they're utility companies, meaning that they're able to sustain themselves even when things are down.
Yes.
And remember that if you're looking at such entities, you look at the top line more. And then the operating profit. If the operating profits are positive, then it's a company that has a positive long-term look. And if you look at the two companies, we've seen that the performance in terms of operating profit is it's very well. Now, the question about the two companies come in at the line where we have the financing cost, and we see that KPLC really has a very big debt to pay, and that is where now, unfortunately, large of their profitability tends to slip away. Another good thing about it is that being a utility company, they're able to sustain the debt levels in the short run, and maybe what they need to work out is just to try and rationalize the debt to make it long term, so that they can be able to reduce their cost of financing. If they're able to do that, then that's positive, and that's the reason why you see the government entering into contract with Japan. The essence of it is just to try and give KPLC a long-term debt and to be able to manage their cost of financing. If the cost of financing go down, then we'll tend to see their profitability going up.
Fantastic. So KPLC, KenGen, if you had to hold one, which is a good one?
KenGen.
KenGen, yes. And then you hold it into the long term.
Yes.
But then it is KenGen's future success 100% dependent on KPLC's success?
Yes, somehow no. Majority of their revenue comes from KPLC. That is a good thing. But one thing we've seen is that they're trying to diversify their revenue stream. So that's another thing.
All right.
For KPLC, for those who want to buy KPLC, I will say the ones who have the risk appetite, the high risk appetite, then KPLC is the stock to buy.
It's interesting when you talk about KPLC, because there's a time in the market we were so confident about KPLC, and it was at 14 shillings. Then it came from 14 to 8. And we still kept saying, it's a utility, you never lose money in a utility. Now it's at 1.8.
The problem with KPLC, and unfortunately to say this, it has nothing to do with the type of clientele.
Yes.
And the product they have, considering that we know that we do need power. The problem was, number one, on corporate governance, where we had issues. And then number two, we had the issue of last mile, where with the contract they entered with the PPPs, that is the private power producers, and also with KenGen. Produce, will buy. And unfortunately, the expectation of the consumption that were projected was never met. So the PPPs are still holding them tight. If they manage to rationalize that and then work on their corporate governance, and like you've seen in the recent past, they've tried to clean out a little bit of corporate governance. So on that front, we have positive vibe about it. But now it's the aspect of trying to ride out the PPPs. If the private producers manage to agree and also see the sense behind the consumption vis-a-vis demand, the production vis-a-vis consumption, and they're able to come back to the table and agree on it, then it's positive for KPLC.
Okay.
Another thing that we've seen is that KPLC has tried to work on the tariff, trying to increase the tariff, especially the retail tariff. Again, it hasn't been positive, considering that the tariffs that they're working on are outdated as per the agreement that they had with the regulator.
Okay.
So if they're able to do that, then we'll see that the revenues go up.
So that's a trigger point.
Yes.
Okay.
So a few things we see positive about KPLC, but they have to happen fast before KPLC turns around.
Okay.
Yes.
Wow. So a couple of moving parts, but at this point, probably KenGen is sort of a better buy for the longer term.
Yes.
Okay, I'm also remembering KenGen when he came out as an IPO. I was in university, and it was such an exciting time. We doubled our money. I can't say so for the current price point. All right, so we've looked at KenGen, we've looked briefly at the banks, we've looked at Safaricom. Was there anything happening in the manufacturing, Bamburi, EABL? What's going on there with this one? BAT, British America Tobacco.
British America Tobacco is a few things that we can talk about BAT. Number one, They're trying to push the export business. As of the last reporting, 55% of their revenues was coming from export, which is a positive thing for a company, especially in a country with heavy regulations in terms of smoking like Kenya. So that's a positive thing for them. Another thing is we've seen is that they've tried to move, diversification is really happening with the nicotine patch, which is a positive thing again for that. And the pricing for the new product has really hit the market in a positive way, and we've seen that as per their H1 reporting, they did make about 100 billion in terms of from the lift nicotine patch. So that's a very positive thing about
about BAT.
So the push and pull about regulatory remains one of the key issues for the company.
Yes,
but as of the moment, we've seen the government has did not penalize them, especially on the sin tax.
Yes.
The only thing we are waiting for is the normal inflation increase in terms of prices, which they said they're going to work on in January.
So
as of the moment, BAT is a good company, especially being the only other company that paid an interim dividend.
An interim dividend.
Yes.
You know, it's interesting. 2 weeks ago, I was following parliamentary proceedings, and the MPs were sort of akin to saying that we must increase excise tax because we need to be able to protect our population from cancer-related diseases affiliated to the consumption of alcohol and cigarettes. So it was a conversation that started, and when I hear such things, I'm normally like, is this going to be now an additional excise tax in the next bill when we're talking about the finance bill for 2021? So that was just something that came out, and I like what you're saying, that in terms of regulatory risk, that's an apparent risk because the MPs can jump up and decide we need to add the tax to this so that we're able to mitigate the risks affiliated with this. But thank you for that. What about East African breweries and Bamburi Cement?
I'll start with East African breweries. With the closure of clubs and pubs, they're still going to get a hit. Their distribution channels, especially retail entities, has not really generated the revenue we expected it to. Unfortunately, even with the Q1 ending, unfortunately, they're going to get a hit on that front, especially after the government did the closure of clubs at 7 p.m. and even restaurants. Now, there was a talk between bar owners and the government, and unfortunately that has not gone positive to the bar owners. They're still negotiating on that. Hopefully they'll be able to negotiate it and close it before the next presidential announcement, especially with regards to the COVID environment. If it does that, then it will be positive for EABL. Remember that they're trying to push as much product as they can with the retail section, especially the local pubs. And also they've gone into different ways of dial for a drink and all that. But again, that might not be able to match
what they were selling in the bars.
Yes.
Okay.
So that's the negative thing. Now, if that is turned around, the only good thing about EABL as of now is you're approaching the festive seasons. We know that the consumption will go high. Unfortunately, one of the key drivers is yet to be reopened fully. That is keg.
Yes.
Keg Senator.
And that's especially in the Kisumu plant, which is closed.
Yes. So that generates a lot of revenue for them. So that will be able to give, unless the government opens that, EABL remains on the down low. The only positive thing I can mention about EABL is that their revenue generated from the subsidiaries in Tanzania and Uganda have upped their app.
Okay.
So Tanzania was a really positive move on that front, especially across the board, all the products.
Okay.
Tanzania, we saw spirits moving up high, so it's a positive thing again for that. What we saw is that the revenue contribution by Kenya shrunk from the normal 65 to about 60, with Tanzania going up to about 17%. So that the losses that the Kenyan market are making are somehow being able to be contained by the two
markets. Okay.
But again, is not as to the level we expected it to be. So unfortunately, unless there's a reopening of the economy in terms of drinking and clubs, we'll continue seeing EABL suppressed.
Okay. So is it then a good time to buy now? Because at some point, the economy will open. I'm just wondering what the valuations are, because we went from a point where it was trading at 139, it went all the way to 172. And last week, we also saw it rally up a bit, and it closed at about 168 shillings per share, 169 shillings per share level. Is there still value from a fundamental point?
There is very big value in EABL,
Okay.
especially now that the prices are heavily discounted. And anybody who wanted to get to EABL, remember that there was a time when EABL was trading at 220.
Yes.
So people were afraid of getting into EABL at that particular time. So this is the time I will tell clients to get into EABL, because when that turns around, EABL is one of the big companies that knows how to innovate, that knows how to push the product, that knows how to get to from manufacturing to clientele. So that is something that we should be able to park ourselves in and wait for that, because the strategy by EABL remains one of the best in terms of production to retail. Remember that they try to manage the whole from farm to where it gets you to your glass. So that they have a very good strategy on that.
And they're very efficient as well.
Yes. Anybody who's wanted to buy EABL, it's time to get in and to pack up.
Okay.
And remember, they also pay good returns. Their returns is approximately 10% on yield. So again, another positive thing on that front.
And also just on that, Nalwenga, let me chime in, because when you look at the dividend payout, the banking sector is now restricted by the Central Bank of Kenya, which leaves you, if you're looking for a dividend yield, to look at companies such as EABL, because for them, as long as they have the cash, they will be able to pay back without regulatory oversight on dividends. So that's just an interesting perspective as well.
Yes, and another thing that we need to note about EABL is one of the few companies, considering the banks are very heavily regulated, they will still pay dividend, and considering that also their borrowing platform is still positive, so they can be able to pay out and also borrow to do their capex.
Okay.
And another good thing is from their management strategy, there's not much capex injection that is going to after finishing the Kisumu.
After finishing Kisumu. Okay, fantastic. So it looks like cash flows could be positive, and once the economy rebounds, then it's something to look out for. So we take a short break, Nalwenga, but what he's telling us is, for one, if you are a consumer of beer, you should have already bought sufficient EABL stock up until now. But if not, from a fundamental perspective, we do expect a correction at least in another 6 to 12 months. Once that correction happens, the cash flow that this company is going to generate could find its way into your pockets as a shareholder. We take a short break. When we come back, we continue with the wrap up of the equities, as well as taking a look at what was happening in the fixed income markets and what to expect for the week ahead.